Enough with the little idle chit chat. Today is, double check the day, I think it's a Tuesday. Yep, Tuesday, April 14th, 2015. This is your daily Forex trading strategy session. Today we'll focus on technical analysis. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. We'll cover Forex, energies, metals, indices, and some binary option setups. What do you stink? Smell like a plan? Remember, trading and investing is risky and not appropriate for everyone. Past performance, good or bad, never predicts future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Because losing's fairly easy. Winning is quite rewarding. Oh, did he, YJ? All right, well. No, yeah. All right, so this is Euro USD. If you recall, it fell a lot yesterday. I was going through my charts, doing my normal biz, you know, keeping my mind on my money and my money on my mind, and I found this. Remember this note we left for ourselves? At first I said, sell the hell out of the euro here, and then we changed it, sell the heaven out of euro here. But it was pretty funny, because we haven't looked at this in a long time. Yeah, you know what? Oh, was it the finance minister? Oh, gosh. Well, there you go, YJ. It was a tough few years. It was all about the same time, wasn't it? Like, man, these Japanese are hardcore. Anyways, that's off topic. But, yeah, check that out. Isn't it funny? Sell the heaven out of euro here, and looks like we were right on this one. Now that it's moved 500 pips, I think we can call that a good trade. I remember doing this. It was just funny. I'm like, oh yeah. Remember, it never hurts to leave yourself notes in the future. Remember, like Memento. The guy with amnesia keeps waking up and there's post-it notes all over the place. Yeah, leave a memento for yourself and say, hey, next time we're up here, sell. But anyways, we actually did that, and you know, pretty nice stuff. So I thought you'd appreciate that. All right, so, I mean, what do you want to talk about in regards to Euro USD? I guess we can change a template here. All right, so, you know, is this an exhaustion level? This is the previous swing low to the previous swing high. Okay. And what you'll see here, this goes back more than a 786. You could play it as a 786, but it really looks toppish. So let's kill that. We'll probably need to get rid of that trend, but so what others will probably do is they'll take this here, call this a bottom. One, they'll measure this distance from here to here and use that as a target projection. Would you do that? What would you do if you were you? That puts us down to the daily S3, but it's a weekly S1. Not the craziest in the world, right? So let's mark this projected low and then check it out on a higher time frame and see if it goes anywhere. Ooh. So let's go in here. Is that the actual wick low? I don't have any more on that, right? Yeah. So it seems. So what are we discussing here? 104.5, 104.80. I don't see why we have to be so picky, right? So let's look at some other facts in here. Oh, just in case I didn't make it, obvious. Yeah, I think I'd be nervous anywhere close to 104.5 if I had 500 pips profit like YJ. I would be, I don't know. Another 50 pips, is that really even that important, would be kind of my thought process right here. Probably not. Right? Because there's risk building up. I don't think there's any doubt about that. You are below the 21, but all I'm suggesting is maybe, just maybe, you scale out, excuse me, you scale out, and inevitably there'll be some sort of pullback, and it'll continue mission to the next level. Right? But I think we could all agree that as we're approaching this area here, it does become more and more risk toward any profit that you have from selling up high. So, just make a plan for that. What would you use to get out? Is it a moving average crossover? All that kind of stuff. So even though I said, I'd like to get you guys into a 1,000 pip trade, at the end of the day, you get paid to profit, not necessarily, there's no glory. Like, no one's going to slap you on the back and say, hey, good job on the 1,000 pips. Is that right? Yeah, it's consolidating, bringing it in close. What time frame are you using for that, YJ? YJ is talking about PSAR, which parabolic stop and reverse, gives you a suggested placement for stop losses based on volatility. So a 4-hour PSAR, just like this, huh? So you can go like indicators, parabolic stop and reverse, and it's already fat. Okay, good. Okay, and that's that. Yeah, you know what, YJ? That's a pretty good thing. Just play that out. If that's your strategy, that's good. It's well thought out and stuff. Why not? See it to the end. It seems pretty good. For example, if we don't make a low today and sort of like Asia tomorrow kind of thing, like if we don't make a low in the next 24 hours, it's probably not going to happen, and you'll get taken out by PSAR anyways. So that seems pretty good to me. One mistake a lot of traders often make when they have a big trade going is they stop all other trading. So just remember, your goal isn't one 500 pip trade and you stare at it forever, right? Your goal should be 500 pips a week if you can. 250 isn't, is much more reasonable, but in a trading week when it's falling fast and furiously, try to get 5 trades that make 300 pips each versus 1 trade that makes 500, right? Yeah, it's just big winning trades and big losing trades seem to like freeze a trader, seems to freeze a trader like a deer in the headlights of a car. They just stop and, and the problem when you have a losing trade is if you don't act, it just basically gets worse and worse and worse and worse. What you could have done, just gotten out. A slap would not have to be a gunshot wound, right? A slap in the face is easier to recover from than a shotgun wound. But also, while you're sitting there watching your loser trade get worse and worse, you could have taken the small loss and got yourself into one or two good trades that were making money, right? Okay? And so just as bad as sitting there watching a 500 pip trade, is what you should do is just move your stop, in this case, according to PSAR, and find your trade that you did for today. Who cares about what you did a week and a week ago, right? You sold a double top. Good. Move your stop. Find another trade. But anyways, good job. It's a nice trade. If you have a lot of trades, and I've had as many as, I think the most I've ever managed at one time was like 130 open positions. That gets tricky. So very often what I'll just do to simplify things is, you enter like a 100 pip stop, 300 pip limit, done. And then you can go back and manage over time, but very often while you're sleeping, you wake up, you've busted out on a couple for minus 100, and you busted out on a couple for plus 300, and you're like, oh, okay, it all works out. And then you go through and you start moving the stops and everything that's still open. And if you need to move a limit on something, but after a while, you just focus on the law of averages, and you don't really care. And you have so many losing trades and you have so many winning trades that you just don't even care anymore because, it just all gets thrown into the numbers. And you stop thinking like, oh, that one might have gone another 200. Well, you know what? You've made 9 trades since then, so who cares, right? So just find another trade, right? Move your stop, lock in profit, find another trade. Lock it, remove risk. Lock in profit, find another trade. Remove risk, lock in profit, find another trade. Oh, Brett has a question. Where on this? Well, in this case, he's up here, so he has 500 pips. So his stop, according to PSAR, should be down here. His stop is, only 40 or 50 pips away out of the 500 pip move. But what I guess what you're saying is add to the position, because I know what you're saying. I think if that's what you're saying, I had a situation like that with Euro USD yesterday. I think I had this chart on I think a 15-minute. That doesn't look right. Anyways, I had it open somewhere. And the issue was I entered in a 15-minute stochastic cycle, and it was way overbought. And it fell, I must have had, I don't know, 40 pips profit or something. And after 2 or 3 hours, it came all the way back and basically came back to my break-even point. And then I had to do is just leave it, consider it a new trade, or add to it and double down stuff. I tend not to double down until I consider the first trade either dead, right? I've busted out a break even, or I've busted out at minus 50, let's say on a spot trade. Or I have let's say at least 20, 25 pips locked in, and it's done to me. I could let it run for a couple days, won't matter to me. I'd rather come back either plus 25 or plus 250, right? And everything in between is irrelevant. And then I'll just look for a new trade, and it's independent of the first one. Adding a second trade at essentially the same price as the first trade, all I'm doing is getting the same trade at twice the risk. I don't know. I already got that trade. Let's say selling Euro USD at 106. All right, fine. I already got that trade. Let's go find USD Yen at 119 or something, right? And just go diversify, Brett, right? Diversify until the second Euro USD trade is a completely independent trade. Different fractal pullback and all that kind of stuff. I'd rather build a basket, right, than having 19 trades on the Euro USD all short and nothing else. I'd rather have dollar, let's say long dollar versus everything, and then go back in a day or two and then rebuild the basket from that point. Yeah. Well, we have a question here about hedging, and in particular the Swiss franc scenario. That's, I don't know. That's probably not a good scenario to think of because, first of all, the Swiss National Bank lied to you, and second of all, the market was gone. That's what happened. There was no market for the Swiss franc, or in that case, the Euro Swiss franc. So that's not a good scenario. And that trade, unfortunately, I was in it with some personal money, but no professional money. And I told people I don't really like it. It's a dog and pony type trade, smoke and mirrors nonsense. But I said I kind of feel like I'm supposed to be in it, so I'll put small trades on. I did, and I paid the penalty for that. I knew better. But in any case, as far as hedging is concerned, I would rather you hedge on the short term than the long term, because it seemed like the question was, long Euro Swiss franc and then short something else, Euro Swiss franc, and offset that bigger. I'd rather you get into a trend type trade and then hedge the pullbacks, and that's how I've taught. So if you go to youtube.com/C for channel /Traders Way, and then do a search on like hedge with binary options. I've done probably 2 or 3 videos, and I can do a very, very quick overview here on how to hedge those long-term positions. Now, I think the examples I gave is, what do you do if you're fundamentally bullish on a currency pair, but technically right now it's bearish? Okay. Well, it's an interesting question. I mean, it's important to everyone. So I would rather use, so that's one scenario. But the other scenario is like YJ's scenario. He's got like 500 pips profit. He's short from up here. What does he do during these large pullbacks? Well, that's where you can long using a binary option. So he's short the cash, so he could be long the derivative. And you'll notice if you go back in history, these pullbacks occurred at very logical levels, the complexity of which would be like psychological levels. So, if he expected a bounce at 108 and he's short at 110.50, throw down a binary, cost you $25. It's not that big of a deal, right? In that case, he might make some money being long here, and then the cash drops again. You might make some money here, not a lot. He's hedging it, making money on the way up, and then it continues mission. Okay? So I think that's the best way to hedge, and all you're doing is making money on the pullbacks when your trend trades are losing money on the pullbacks. Now, you don't need to make a lot of money. I don't want you to offset a Euro USD short with a Euro USD long. Both are cash. That doesn't make sense to me. Throwing down a binary, especially one that doesn't need to be managed, something that's not going to cost you yield. Okay? So that's how I would do it, is with a binary option. All right, so let's do something else. We still got a lot going on with USD Yen. Have you guys been trading that today? Yeah, sweet. Let me change this from the derivative to the cash. Just a little more fluid. Because remember, a binary option is, it has to be matched. It's a lot less liquid than, obviously, Forex, because nothing is as liquid as Forex. Baby, slow down. Yen is not as far. Please stay a child somewhere in your home. All right, so you got to choose what team you're on. So if you're going to sell it at 120. Where are the vast majorities of the stops if you sell it at 120? If you were a bear and you sold it and you're just short 120 because it comes up, touches 120, drops back below 120, so you sold it. We know that's how it works, right? Where's your stop? Most people are short right where they're supposed to, right? Plus spread, that puts your stop at 120.20. Right? Because you pull the trigger and it's 95. Not quite 120.00. It's 119.95. And then you got the 3 pip spread. So, basically 120.20. If you're bull, you didn't quite get where you wanted to, but you could have off of this area. But I think psychologically you would have been looking for this. Okay. It got within 3 pips or something. So, yeah, I guess it could have, should have, right? Could have, should have, would have, but didn't. So pick your team. So let me zoom in a little more now. You are the first one of your kind, and you feel... Okay, right? So you're right in the pullback zone. Drop into a cinco. Yeah, it looks like 50 was the best. Boom, 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 boom. Boom, boom, doo, 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 doo. Da, 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 da. Do, 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 do. You decided what you're gonna do? What you gonna do? What you gonna do? Got a pocket full of pips, and my homeboys do too. You decided whether you're gonna sell it or buy it? Like no one before. I want a lot of what you got. I want nothing that you're not. Everywhere that you go. It's interesting. I think I missed that. That's a perfect 618. Ooh. I don't like that. That's a perfect 618. I don't want to even think about it, but I have to. So if a 618 that predicts a 1382, ooh, back down to 117. Tell me it ain't so. Well, that means someone's going to short the weekly, right? So have you made a decision yet? Neil, because I need you so much. All right, so Gregor's is going to buy it at 1930. Has anyone else made a decision? 1930 is, I don't see it, because if you wait for that, Gregor's, we're kicking off this 21 on the 15. That would be extremely bearish. All right, because right now what's happening is we'd be breaking through weekly pivots, we'd be riding 5, breaking the 21, going up to the higher level, over the psych level. I don't see that one. If it doesn't fall right the second, right, or if it does fall right the second, I don't know, dude. Yeah, but you have to ask yourself more than just that it's a weak low. If we get down there, what does that mean? Means we have a very fast moving downtrend, at least on a 15-minute chart. I suppose, yeah. Like, let's look at it on a higher time frame. You're saying 1930. Huh. Nah, right in here. Okay, well, good luck with that. So anyways, if you're going to be like a skippy scalper, you could say, Euro USD is having trouble getting through the psych level, right? We're at 91 something. What time is it now? This is one thing I always like to do. It's 12:09. So you could, if you want to hang on for more like 20 minutes, you can say at 12:30, USD Yen will be less, and that's it. Right? Still use your technical analysis. Oops. UV. Do 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 do. Really, nothing even going on the small time frames, right? Just the moving averages are not even doing anything anymore. Yeah, Gregor's is on the 15, so that's what I'm saying. Like, if it kicked off this 21 right now, see the real touch, Greg, the 21, and then if it dropped all the way down to 19.3, that would tell you that the market is incredibly bearish, and you're buying against the market, and I just don't see that level being that important. Rather you trend trade. That's a counter trend trade. To me, it seems like twice the risk, half the reward. Now you might be right, but it's a matter of risk, not a matter of reward. So again, the 15-minute chart would say, it's really respecting the 21, and it's falling fast and furiously. The one thing that probably would work out in your scenario is it would be at the end of the trading day, and you'd probably catch an Asia fade, but you don't want to make a living doing that. Yeah, so some of these moves here have given opportunities to get into the yen-yens. Well, Pete, the best thing to ask yourself is what kind of trade is it? Is it a scalp, spot, swing? That's where you start, Pete. So, like, if hang on, if I traded this, okay, and I was saying get out at 12:30, which is 16 minutes from now, is that a long-term trade? No. So what am I suggesting? I'm suggesting in the short term we're not going to break 120. That's all I'm suggesting. And if I'm right, that means price has to stay, well, technically 1 pip below, but if you give it enough time, it just has to stay out of this zone here. Okay. Now, a longer term trade, I don't like binaries for a long term trade. So to me, they're a hedging tool or a scalp. The reason I don't like them for long term is I would prefer the cash market, because you have unlimited upside if you're right, and if it goes in your favor, you'll also collect an interest payment every single day, 7 days a week. So you don't get that with the binary. So on the short term, limited downside, limited upside, but I'm okay with that. And very often the limited upside still is better than what I would have collected in the cash market, because in the cash market I might be up 12 pips. But when my binary expires, I'll get paid for 25 pips. And I'm like, oh, well, I got twice as much as I normally would have got. Okay, that's cool, right? That's cool. It didn't go as far as I thought, but I still get paid everything I was supposed to. So that's really cool. But on the long run, if I'm right, like let's say in YJ's case, his trade, it might have been on his own analysis, but I set that up to the point where I actually wrote it out. Sell the hell out of the euro here. And we had boxes and lines, and we had set it up 2 weeks early. I mean, it was clear, right? Now, if I shorted a binary there around 110.50, You put, let's say, $100, I would have made $80, right? Now, in Forex, if you put down $100 of your real money, you're going to get that leveraged, and you're going to get paid for 500 pips. So it's way better on the long run. But I've grown to really enjoy binaries as a scalping method. And you guys have seen, sometimes I'll do 5 or 6, 7 in a row that are profitable. They're only, they're smaller trades, right? So like these ones that are 15 and 20 minutes, the minimum's $25, but you can bang out $100 a day. Sometimes more, sometimes less. And that's cool, right? So in that case, I find that my sweet spot is basically a half an hour. Okay? A smaller time period like $5, that goes on to the 60-second platform, so you got over to 60 seconds. And the upside to that is that you can be in it for 5 minutes, and you can risk as little as $5. The problem is that's that's a little bit noise for me, because you're in it for only 5 minutes, and I could be right on the direction, but it'll just spike for some reason. I could be wrong for 5 minutes and not get paid. So if I'm skip scalping, 20 to 30 minutes seems to be what I like best. Because what I'm saying is the next candle and a half, if I'm doing my analysis on a 15-minute chart, is going to be red. Okay, that's it. And because I'm using technical analysis, I'm using price action and psych levels and pivot points and trend lines, I'm pretty certain it's going to at least hold. And you got to remember, with binary options, you only have to be right 1 pip. And if I'm risking, $25, it's like being right 25, mini lots, right? So I only need to be partially right, and I'm going to get paid for 25 pips. Even if I'm only up 3 pips, I'll get paid for 25 pips. So I just have to be patient and disciplined enough to actually sell at hardcore resistance or buy at hardcore support, and then just give it enough time to actually respond to that level. Now, let's say, if you look at the way I have this chart set up, I have it set as a range, right? In the cash market, very often what you're saying is it's going to go from the bottom of the range to the top of the range, but very often it doesn't. In a binary, I just have to say, well, we're at support and it's not going to go down anymore. Right? It can go up a little, it can go up most, it can go up all the way. It doesn't matter to me. I'm still going to get paid the same amount. So that's why I'm like, that's kind of cool for scalping. Now, as far as hedging, like I've said, if I'm fundamentally bullish on a trade, let's say I'm bullish based on fundamentals, I want to long the cash market, because if I'm right, I'm going to get paid a lot of money for that extra risk I took to get in while the market is still technically. I'm not buying dips. I'm buying I'm buying a drop. But I like the support level and all these things, and I like the long-term outlook. So I buy the cash, but it's pretty risky because the market hasn't turned bullish yet. So I hedge that risk by then placing a put or a sell position in the derivative, so that if I'm wrong and it does fall, my stop is going to get triggered on the cash market, and I'm going to collect about 40% of what I lost in the cash market. I'm going to collect back on my profitable binary. And it doesn't cover everything, but I've cut my risk by 40%. You see what I mean? I cut my risk on the cash market by 40% for taking a risky shot. But if I get it right, my insurance policy cost me a little bit of money, but now I'm in a trade with unlimited upside and something that probably pays me a yield 7 days a week. So I'm like, nice insurance. Okay, and that I probably would use, certainly more than, I'd probably look at it on, an hourly chart or a 4-hour chart to make that decision. But I'm making the decision for the cash market first and my long risk. I have a request here by Fendi to stay and catch the retail sales news with you guys. Would you like that? Yeah, okay. I'll do that for you. Please insert $5 for the next 15 minutes. Please insert $5 for the next 15 minutes. All right, I'll stay compliments of the firm. Thank you, tradersway.com. You bet. All right, so this noise is going on here. That's fine. And I'm looking around of USD CAD. I've seen better. The Aussie dollar that's stalled pretty hardcore. But did you guys sell the central pivot point? Because I'm looking at the nice 4 hours sold really nicely off of the 21 EMA, and then it would retrace back up to the daily central for a tickle at 75.92ish. That's a pretty hardcore sell zone, right? I knew. You guys on this stuff? I'm assuming you've already done your analysis, right? So let's see if I have it on this chart. Okay, now I'm looking at this touch here. This big drop into support, retracement into the 21. That's a sell zone, and then immediate drop, which is good. It feels good, but it looks like there's a lot of money supporting that 75.00. Like I said, there are some traders that believe that because Governor Stevens says it's only worth 75, that they believe the maximum downside to this trade is about 50 pips, and of course the upside's unlimited, right? So they're buying at that level. But that's kind of like buying the Euro Swiss franc, though, isn't it? So, but that's what's going on. You can see there's a floor there. I, I don't see why you can't sell that high, right? Like selling at that 21 and stuff. So, even though we're pretty close to support, maybe it's worth a shot, right? So now you go into the shorter time frame. Let me change my template here and show you what I'm stinking. Here we go. And I have it set up kind of differently on my other chart. I'm just looking at this cluster in here, the 382. I have on a different chart. Oh yeah, here it is. See, daily central pivot point right in here, psychological level of 76. You see all that noise? Okay, let's do it again. Daily central pivot point, 382 Fibonacci retracement from yesterday's low to yesterday's high, psychological level. Okay. So I would sell high side 5-minute cycles. Okay. Okay. Now you can see it clearly, right? Easy stuff, right? Oh, yeah. So we're a little bit out of position, and maybe it's due to news coming out, but, you know, I would have sold high up here when the 5-minute was way over. Okay, we're really close to a psych level. It's good enough for the girls I go with. So that, like that 5A cross in here was Excel. We're a little out of position, but I think if it's going to drop, it's going to drop, right? Now this 15-minute cycle says it really wants to try, you know, to fulfill this. Notice that we're being squashed by the 55. That does suggest the maximum this will fall is to 75.50. 21, a lower low. The 55 is in control, so it suggests a double bottom. Okay. Yeah, you know, I don't use monthly because the reason I don't is they don't they don't price in current market sentiment and concerns and Fed policy and all of that. It used to be important. Yes, you can argue that it's support because it was support back then, but to me, it's not nearly as important. Yes, it's technical support, but without the fundamentals behind it, it's much less important. Yeah, I'm sure it's there, and I'm sure it's solid. I'm just less interested because the market. You have to realize the market doesn't make decisions based on technical analysis. Technical analysis influences the point in which you get in or get out, but what makes the trade is the fundamentals. Okay, the fundamentals have changed. Now, if you have um, if you have hardcore technical support and resistance that includes the fundamental concerns, then they're very important. But what happened in 2004 is irrelevant to today. We're not concerned about that. We have different problems. The correlations have changed. The sentiments changed. The concerns have changed. The money flows changed. I mean, it's really, in my humble opinion, and I don't mind throwing it out there, it's completely, well, I'm not going to say worthless, but it's not as important as shorter term support and resistance. People will see that, fine, but they're not going to like, let's say an institutional investor is not going to get out of a fundamentally based trade based on something that happened, you know, a decade ago. Remember, people want to make money. That's what they're doing now. They're looking they're looking at the next years, they're not looking at what happened 10 years ago.
March expected 0.2%, ex-food and energy expected 0.1%, ex-food energy and transport expected 0.1% as well, minus 0.9%. Let's get Canada Terranet data for March at the same time.
The EU Moscovici saying that they'll continue if there's no Greek deal at the Eurogroup on April 24th. They'll continue if there's no deal.
Get the advanced retail sales for March, as well as March PPI in the US in just a few seconds. Sales 0.9% is 2/10 lower than expected. Revised up 1/10 minus 0.5%. Ex autos at 0.4% is 3/10 lower than expected. PPI at 0.2% is in line with expectation. Core at 0.2% is 1/10 higher than expected. Ex food, energy, and transport at 0.2% is 1% higher than expected as well year over year. PPI minus at 0.8% is 1/10 higher than expected.
So what do you think of my trade? Looks like I made a decision. What do you think? High five? That's not bad. Yeah. Thank you, YJ. Nice. Let's get rid of the fibs. Yeah. Loving it. I nailed it. Good little scalp. Good, good, good. Yeah, cool. All right, so let's, one thing that I want to keep an eye on is Kiwi Yen, because we talked about that a couple of days ago. Oh, you just won your first area. Good for you. Okay, let's clean this up a little bit. What's our strategy? Let's try to figure out what the strategy has been. Can anybody see? What do you think, guys? What has our analysis told us? I hope you can see the giant arrow. What do we want to do with this? But you know, like I said, leave yourself a memento to remind yourself about your past analysis. We're at a 618 Fibonacci retracement of this move here, but it's probably needs to be adjusted. Hello. Got to go out to an hourly. All right, so I don't mind this. The part that I don't like, of course, is the lower low. But I do have a 618 if I wanted to try to get in on this. So on the short term, oh, look at that, it's gone. Wow, look at that. It's funny, I was talking, but I thought this would be coming down. I got to watch this in the shorter time frame. All right. Oh, USD Yen. It's at 1950, right? Oh, does anybody have that on the radar screen? Oh, you might have already missed it. And I feel like no one before. You steal from under my door. I need you. I gotta want what you got. I want nothing that you know, baby. What did I do with the binary platform? I must have accidentally killed it. So, anyways, I hope you could hear. I hope you could hear the news come out. It's nice. That was TradeTheNews.com. Thank you to Trade the News. So, yep, there's the entry. I think I sold it at 96 or 90, 96, something like that. And we're now at 50. Cool. It expires in 9 minutes. But what I was suggesting is somebody is probably watching this psych level. Now the second chance scenario is going to be here. Oh, let's do it this way. Okay, second chance scenario would be to sell around 80. What do you think? Is anyone going to try that? Or if so, it'd be sell around 80, but the buy would have been buy at either 1950 or 1900, or hey, 1930, right? You don't have to be shy. Oh no. Just looking at a lot of things. I know usually if I'm humming, I'm thinking. Or if I'm talking in like childhood, animal voices, like, I can't get the honey from a honey pot. I'm usually thinking about something very deep. Yeah, I'm just wondering what I want to do here on the longer term. I might have to, I hate to say it, maybe start buying yen. Don't want to, but it happens. Let's burn through some commodities and then call it a day. By the way, Euro USD at a psych level. Look for second chance reversals on that thing on the high side. So on and so forth. And ask yourself too, just very quickly, I don't think I even have it on this chart. Ask yourself, like open up your chart now, the pound just reversed at a psychological level and has made a higher high on a 15-minute chart. Is this the reversal we talked about happening in the middle of April? We discussed this about 6 to 8 weeks ago. And even though it's the smallest of smallest, you know what? Let me just bring it up. It's the smallest of smallest reversals, but it's happening, and it is the middle of April. Wouldn't it be interesting if this is what we talked about 8 weeks ago? Let's see. Let's look at it on a little bit of a different time frame. I actually have it drawn out as a double bottom higher high. It seems to me a triple bottom and is now making a higher high. Is it possible? Is it possible that that's the reversal we've been talking about setting up here 8 weeks ago? It's interesting, right? Because now the next step to this is, let's say, down, up, and a bigger down, and then a bigger up. What do you think? Now, we did talk about it 8 weeks ago, happening sometime this week. And you can see we even have it drawn out and all this kind of stuff based on some other thing. Probably not the most beautiful chart you've ever seen, but we have talked about it. So it's interesting that even on like a smaller time frame, like a 15-minute chart now, you know what, let me just put this chart back, change it to a 15 fractal. And, you know, clearly a touch of support, retracement, higher low, new news, creating a clear higher high. That definitely sets up a 1, 2, 3 pattern to the upside. It's now a change of trend. And it occurred right at the red zone that we drew, no joke, 8 weeks ago. So I find that just interesting. Let's just, I've really dragged this session on today, so let me just burn some commodities. The world just ain't right if we don't do our analysis. Okay, so we were talking about this coming down to 1155. That's been about a week now. Let's zoom in a little bit more. And it dropped from our top at 1125. It dropped all the way down to 1225 to 1180. So what is that? $40, $35 has now come up, hit the cluster. It's the 382 Fibonacci retracement of our bearish fib study, along with the weekly central pivot point. So the projection based on that now fails. That's a 618 Fibonacci retracement. You can see it's exactly 618 Fib. That predicts a 1382, and that puts us down to 1177, let's say. Okay? So we seem to be good there. And we actually made it to 1185. So we'll see what happens next. Okay, cool. So that has now moved quite a bit, right? From 1225 to 1175. All right, that's pretty good. Oil. Yeah. It's a 618. And I would be hoping to see 49. Okay, we're here. We planned it out from here. Now we're in the zone. I would like to see that. So for that to happen, like somebody talked about a binary option and how much time do you give it. If you shorted, let's say up here at the 618, let's say you let it come up to, you know, I don't know, almost 53 bucks. How about 52? We're at almost at 52.50. You know, I would give it several days to come down. And that's how I would decide that, you know, what time frame to set this up on. You know, yeah, I would short it on a 4-hour, and I would say I need a day, right? I need 6 of these candles to bring it down. So that's how I'd make that decision. So I'd want it, you know, basically a 24-hour binary option or something close to that. Okay. Notice my memento. Isn't it nice? I hope maybe you get in the habit of leaving yourself notes. See, the reason I do it is I go through so many charts in a day that it must be millions of charts in a year. And it's all a blur after a while. Leave yourself notes. Okay, stock market, what's the risk? The risk is earnings. We talked about this yesterday. There's going to be the overall risk for the week. That'll overshadow even some of the really big news that we have this week. A lot of it's just going to be overshadowed by corporate earnings being reported now that we're in a new quarter. So earnings season, and we don't need to go through all of it, but the next week or two, you know, we're going to get a taste of whether earnings are generally good or generally bad. This is traditionally a time to take some risk off the table. And this is normal portfolio balancing. You take off some of your winners and book those profits, not because you don't want your profits to run, because you have a mandate in your disclosure document to be diversified if you're a, you know, a traditional money manager. And so what happens is you're just, you know, you have too much of some companies because their value has gone up, so as a percentage of your portfolio, they're now a larger percentage because they've gained, while other stocks in your portfolio might have lost. So what you do here is you cash out of the winners first, brings the stock market down, prices deflate a little bit, and then you exit some of your losers at the lower price and maybe buy some of your winners back. So I think what you'll see here is maybe this week and maybe even part of next week, a further decline. Maybe we even come back all the way down to the bottom to this gray zone. And what do you do here? You buy it all back. So what you should do now is play the top. Okay, take this area here. I thought it would go a little higher, as you can see I've drawn. But you take this level here, you take that there, and you know the 3A2s here. 50% looks better at 2072. 618, but you know, who knows? We might be the S&P 500 at 2050 again. But that's how it goes. And you'll be long until September or even farther. And that's about that. It's been a very, very long session. I want to make sure it gets uploaded to YouTube on time and stuff like that. So hey, thank you for being a client of Traders Way. I hope you got something special and wonderful out of today's session that you feel all tingly and fuzzy inside. Thank you for being on my team. You keep me focused and sharp, and I appreciate that. If you're watching a video of this, hey, give it a like, leave a comment. Peace on earth. May the pips be with you. May your profits be above average. And I'll be here every single day for you, every trading day, 7:30 in the morning, New York time, otherwise known as London lunch. I'll see you tomorrow and the next day and the next day. Cheers.